We know Prudential has a very long history, over 170 years, and your company has just decided to be moved in Hong Kong. What's behind this decision to move to Hong Kong?
We are a 175-year-old company. I'm the first CEO in the 175 years history of the company to be based out of Hong Kong. We have primary listings both in London as well in Hong Kong, but we did make a significant shift about 4 years back to focus only on the Asian and African markets. These are the high growth, high potential markets. And I believe that being closer to the market, being closer to customers, being closer to different stakeholders, including our regulators, allows us then to respond quite quickly and quite promptly.
Tell us about your cooperation with Citigroup. We understand you've been working together, and also China's promise of continuing allowing foreign access to the financial market, meaning that financial institutions may have more stake or shares in a joint venture.
So China is a very important part of our growth ambition. Huge market, supersized market, the second largest economy in the world, and Premier Li Qiang spoke to us and was emphasizing that he's very welcoming of the foreign direct investments. And if you look at the fundamental growth drivers of the Chinese consumer, it's still long-term savings, it's retirement, and it's protection. And that is where private insurers like us can play a significant role. We have a very long-standing partnership with CITIC. We are very proud of that partnership. We've been in the joint venture for 23 years. We have access to 100 cities across China, 15,000 agents, 4,000 employees, over 60 bank partners. And we recently have invested $1 billion renminbi additional capital to support our growth ambition in China. So we continue to remain excited about the growth prospects.
You just mentioned the pension markets. I think China's pension system is also facing a pressure of maybe less income from young people and more, expense because of more pensioners. That's why we need a multi-level pension system. Tell us about the potential, market potential for you.
I think aging population is going to be a significant challenge, but because it does put a significant demand on consumers to save up for the retirement years. And if you look at just the inflation and the growing needs that the consumers have, the consumers need to start to plan about their savings and the long-term savings and retirement specifically earlier. And towards that, initiatives around Pillar 3 are going to be very important, where consumers are encouraged to save on a regular basis, on a more consistent basis, over and above the support that they get from the government. It does two things. One, it obviously helps consumers to plan better for their future, but also reduces the burden on the government to support the aging population. So we remain very optimistic about the growth prospects, specifically in the Pillar 3 part of the pension reform.